This was a trade that I was meant to break down 2 weeks ago, but I didn't get the chance to break it down because I got real busy. But in this video, I will be breaking down the different types of impulses when it comes to the easy money concept strategy. And I'll be breaking down this trade from entry till the TP. So as you see right here, one of our rules is always the new impulse has to break the previous structure point. If it is bullish, it has to break the highest point of the previous structure, including the wick. And if it is bearish, it has to break the lowest point of the structure, including the wick also. So right here, you see two different types of impulses. On this side, you see the impulse creating higher highs followed by higher lows, and this new impulse breaking the previous structure point, creating a new high followed by a correction. So this impulse is a very confident impulse. It had a clear break of the structure with good momentum, closing above this previous rejected point, the previous highest point. On this side, you will see that we had an impulse followed by a correction, followed by a new impulse. But as you can see, this impulse right here did not break and close above the previous high. In my eyes, this indicates that the new impulse is less likely to play out because it didn't have enough momentum to break and close above the previous high, meaning there's a very great chance that the price will just create a new high followed by a correction, try to create a new high but fail and then go all the way back down and possibly reverse the trend. So let's break down this GBPCHF. As you know, we always start out on the daily time frame. On the daily time frame, we will be looking for a impulse. Normally, we look for an impulse breaking previous structure, but as you can clearly see right here, this new impulse after this correction did not close above the previous highest structure point. So I will draw the structure just to give you an example of what I'm talking about. As you can see, price came all the way up here, followed by a correction, followed by a new impulse. But you can see this impulse did not close above this highest point. And then we had a retracement. So it will look like this, like I previously drawn up. So normally we would not consider this trade, or we would just go with a 0.5% instead of a full percent. Like I just explained, the probability of this trade playing out from entry to TP is less likely than if the structure point would have just been broken. If this structure point would have been broken by this impulse and close above it, because this indicates that there's enough momentum to keep on going, and it shows very strong structure with a lot of confidence. So I still took this trade, even though it did not close above the previous structure point. Right now, we have a new impulse, all the same color, followed by a correction of minimum 2 daily candles, also all the same color. So this is a valid setup. Then we go to the weekly time frame. On the weekly time frame, we will be looking for resistance or support that could be of influence for our trade. As you can see right here, we came into this area, which could be seen as resistance. That will mean that price will likely have trouble going above that zone, but you can see right here, it had rejected all the way to the downside, came back and retested it here 1, 2 times. So that is another indication that price has trouble going higher, but we still took this trade. Sometimes you just have to see for yourself if it is worth taking the trade or not. More than likely, I don't take the trade if it is at the weekly resistance and it also didn't break the previous structure point. So then we go back to the daily time frame. On the daily, we will draw our Fibonacci in the opposite direction of the correction. So right here, this is because we will measure the distance of the new impulse that will be created in a moment. On the 4-hour, we will wait for price to break the 61 level right here, followed by a retest. That will be our entry point, TP at the negative 27, and our stop loss either at the 88 or the 100 level, depending on the structure. But I explained that in previous videos, so you can also go watch that if you would like. So let's play it out. Right here, you can see price had broken this 61 level, a clear, big, heavy momentum candle. That will mean we will put our buy limit on the 61. Let's put our buy limit there. And our TP is the negative 27. Our stop loss will be, in this case, below the 100 because there is no structure around the 88 to protect our stop loss. So our stop loss goes, in this case, below the 100. As you can see right now, it is not a 1 to 3. You can either choose that you will take the 2.28 risk to reward, or you can adjust your entry point to create a 1 to 3. Right now, we're going to adjust it to create a 1 to 3. So yeah, 2.99 and 1 to 3. So right now, we're in the trade. Price had break the 61 followed by a retest. We're just waiting until this 38 can broken and close above, so we can put our stop loss at break even and enjoy a risk-free trade. So let's play it out. Right here you see price breaks the 38. This means our trade now becomes risk-free. And as you can see, boom, price hit the TP negative 27, and this was the 1 to 3 risk to reward. But if you go back down on the daily time frame, as you can see, after price hit TP, it just straight melted. So price came, hit TP, that's why you don't go further than the negative 27. Just put it on the negative 27, enjoy your 1 to 3. In this case, price didn't close above the previous structure point. So that was one red flag already. Now you see price hit the negative 27 and immediately reverse. So let's play it further out to see what would have happened. Boom, 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 boom. And as you can see right there, price just completely reversed. And that's why I say, if you want a A+ setup, just wait until price break and close above. If you don't mind, you still can take this trade, but the probability of it always playing out is less likely than if price would have just broken and close above the previous structure point. So this was the trade. I hope you enjoyed this breakdown, and I will see y'all in another breakdown. Peace.